Let's do this. Welcome back, everybody. Welcome back, boys and girls. Welcome back, all genders in between. Bulls, bears. You are one big family of wolves to me, and crypto families stick together. We toughen out the hard portions of the market, and then we try to make money together because that's what a family does, right? So if you're in this kind of thing, then I call you welcome. I hope you're having a great day. I hope you guys are crushing it. Little recap of what we've seen yesterday. Yesterday, I said that potentially breaking this low area could make so that at least a quick rebound is not going to happen. So right now, what have we seen? We've seen price push up a little bit further, and actually on the downside, getting outside of the support area of this trend line, and now on the upside doing the same thing, just trading a little bit outside the resistance line of this trend line. What does this mean? It's just like a rejection, maybe some liquidity hunting. Sometimes whales, they like to push outside of boundaries just for price then to get back inside. But for now, I would say nothing is yet just lost. Very interesting as well, because yesterday, looking at yesterday was about here. The accumulation and distribution was actually in the red, angling slightly down. During the night, we've seen it go like really down on the 1 hour chart, and right now we're back in the green, but losing a little bit of momentum. Now, what does this mean? Potentially. Oh, hey, hello, Charles. How are you doing? Welcome to the chat. You're the first one to say hello. No. Rakesh was the first one, but I don't know if he's still there. Yeah, it's all good. It's all very good. So what was I saying? Let me get my thoughts back together. Yeah. So we had a little bit of pressure down, pressure up. Right now, the accumulation and distribution is more in the area of accumulation, which is not really a bad thing, although it is angled slightly down. And as you know, guys, this is a new indicator for me. I find it very interesting, so I'm going to keep track of it, and over time we will figure out together how to make the most out of it, because it's not just about reading the indicators. You also need to put it in perspective of what you see happen with the charts. That's actually the most important thing. BTC hitting the green line. Oh, you mean over here, the moving average? Well, actually, if you look closely, then all three moving averages, the 233, the 144, and the 55 are actually close together. Now, what I would hope to see is eventually see them cross back over so that they are all lined up in the right order again, and that's usually a good sign for long-term continuation. Right now, still a little bit in the sideways decision area, although there are a few very nice signals, very positive signals that are in the chart. But of course, never ever say never, especially not in this game. Things can turn very quickly. But for now, let's have a look at what we see. Let's start with this, and then afterwards we're going to reanalyze the situation, put some new levels, measure off some new limits and key areas that we want to keep our eyes on, and then after that we can try to come to a conclusion of how to set up and play this entire situation. Now, I hope you guys have some coffee. I grabbed my coffee. I already finished it. So yeah, never mind on that. And let's roll the intro. I'll see you guys in a few seconds. Yeah, that's the Wolves intro. Love it. So, all right. What is the first thing that we see on the 1 hour chart? If we look closely over here, these three lows are more or less on the same area, with maybe even this one being slightly lower. And what do we see on the RSI? Three higher lows consecutively on a very, very short term. So usually this is kind of like the dream signal that you want to see for a bottom to be confirmed. Not only having like a bullish divergence building up and then a continuation following. Right now we do have also a local bullish divergence in play. And is it confirmed? Let's have a look. Well, I'm gonna have to say, as long as we don't have a closing above the 48,350, that would be the area coming out of here, I would have to say no, it is not confirmed just yet. I really want to see that candle close above this area, and then I would think like, okay, we are safe. Then we have this area over here that serves as the next area for support. And then we have our stair stepping going, and you know, things could keep going from here, especially over the weekend, because as you know, weekends are usually more volatile. A lot of emotional traders kicking in, and when they see altogether that the price is recovering, well, guess what? You know, everybody wants to jump on the bandwagon, right? So, you know, things are looking actually not as bad as they did seem a few days ago. Although coming here in this area, I was starting to feel that, you know, things could be picked up over here with this area. I was also expecting that at least the downside was going to be an opportunity. Now let's see if this plays out. But of course, you know, we're not going to believe in Santa Claus. We are going to analyze both the upside and the downside, and we are going to try and find a way to manage this whole situation so that at least we can even prepare for the worst. And that's what grown-ups do when they try to be responsible with their money. Yeah, no, just honestly, this is the way you play the game. You know, even though things are looking very promising, you don't jump the gun, take it nice and slow, and you know, you never know what could happen. Okay, put this really in perspective. There's no such thing as predictions or crystal balls and all that stuff. It just doesn't work like that. So key areas we need to keep our eyes on and we need to focus on. I would say this one over here, because this is the new local low on the RSI. So obviously making a lower low on price action and a lower low on RSI, bam, we are going further down. Even if afterwards it pops up, it's just going to be, or it's probably potentially only going to be a lower high followed by a lower low, because that's what we would be expecting from a continuation pattern. Even though it goes almost here, chances are we're never ever going to see a higher low. Is just going to turn back down. Just like what we've been seeing here. Higher high confirmed on price action and RSI. So basically we are expecting a higher low and we are expecting a higher high after that. But of course, is this going to happen in a few hours? No, I don't think so. I really, really do not think so. But, yeah, things could turn for the worse. Because over here we do have a lower low followed by a lower low on the RSI. So, you just never ever know. Things could still drop a lot lower and keep making more and more of a divergence with this area. As long as we don't break this one, I think we should be good. Yeah. Yeah. Is it likely to happen? My bias says no. But, this is just my opinion. And you should never ever trade anybody's opinion, especially not somebody who likes to, talk about trading over on YouTube and stuff. You should learn to do your own analyses and build on that. Build on your strategy. Just learn these things. I couldn't find the right words. So let's just analyze these areas first and foremost. So yeah, we're gonna start with the low end over here. Let's see, this one is sitting at 30.72, and oh, guess what? I already did the math on that, and we have 53.300. No, Jesus, what the hell is wrong with me? 45,300. Wow. Okay, never mind, we're all good. Everything is good. Now, what we see over here between this area and this one is actually already some pressure down, because this one and this one are actually lower highs, while over here we already have some higher highs. Now, it's not a big issue because we are stepping out of this bullish divergence area, so pressure is up, and as long as we don't create a lower low, this is not a confirmed bearish divergence. Okay, so for now, I would say things are still good, especially looking at this green dildo. If this green dildo really manages to push up and to close above at least this area, I would already be happy just seeing a little bit of a pullback. That's your next opportunity. And, then it becomes easier and easier to risk manage. So, the situation becomes nicer and nicer with every step we take, because it becomes easier and easier to risk manage. And that's something that you need to think about. If you're looking for some information on the internet and stuff, I would not be looking too much for straight technical analysis videos. Just watch a few. You see here how I do most of the things, but look for some potential strategies, all the different kinds of strategies there are, because there are hundreds out there and I cannot name them all. It's something that you need to figure out for yourself, is like, which ones do I prefer to apply in certain situations? Because your time management is not exactly the same as my time management. So I can afford to take other risks maybe that you could not afford if you're working, or vice versa. The day that I will be working full time again, I'm going to have to think about other strategies that would actually work with my living situation. So this is why I don't really like to make tutorials about that, because it is very, very, very personal. Some people just like to try to hit the lows and set stop losses. Other people, they martingale down until eventually it turns up. Do you have more capital? Do you have less capital? All these things are factored, have to be factored in to make that decision. Time travel, how are you doing? So time travel says it will probably become more easy once the market gets less volatile. Yes and no. Yeah, I understand what you mean. For me, I think the easiest markets to trade is when a long-term trend is being set. Whether it goes up or down, it doesn't matter. But like, look at this. Look at this. This was an easy trend to follow, right? A monkey can make money here, and a good trader can even outperform the rally, where over here we're talking about a 10x something more or less. A good trader could make it into a 20x. And this is why day trading, in my opinion, is more profitable than just hodling, but it's more time consuming. Then on the other side, when the market really confirms a complete bearish downtrend, same thing happens. You can be making a lot of easy money just by trading the other way around. So, in my opinion, it's those sideways in moments of indecision that are the worst. I think this is where most people get creamed in their face. So yeah, time travel, you're doing great. I'm really happy to hear that. And I am doing great as well. We're all doing great. We're fine and dandy. Yeah, awesome. So now that I'm actually looking at the 10-hour chart, the 10-hour chart, the accumulation and distribution is still leaning down. But remember, this is a 10-hour chart and it turns really slowly. Does this mean that we can still see a little more downtrending? Potentially, yes. Yeah. So yeah, let's analyze. Let's have a look at the downsides and let's see where this can lead us. Let's take the low of the lows over here. We get 28.2. You know what? For this area, I'm going to move over first to the 3-hour chart, if that's okay with you guys. And whoopsie. I'm going to look for this area over here. I think this one is a good one to look at. And then after that, I will be looking at this area because right here, we still do have a higher low, higher low, higher low. Okay, so I think this one could be very interesting to spot a real bottom. Maybe after that we can also look at the 5-hour chart. Let's see what the 5-hour chart looks like. Same thing, we can compare it afterwards with the 5-hour chart. And oh, what does my eye spy? Sometimes you just need to be looking for clues, a little bit like an investigator. Because the market leaves a lot of clues. It's a very polluted crime scene. Nobody cleans up the mess, but you need to keep your eyes open. And it's not always the same thing that we're gonna have to look for. This is why I prefer to guide you guys through me analyzing these charts on a daily basis, so you see for yourself that it's not always the same thing that we are going to be looking for. Sometimes, more often than not, yes, the same things do come back. But sometimes you really need to look for where the exact clues that you could use are going to be. Now, this is the local low of this entire pattern. This is the lowest low. So we're going to look for this one here. This is sitting at 28 on the RSI. Let's do this, 28, and we got 40. Wow. Same thing, 44,300. I'll be, no, it's 44,300. It's $1,000 difference. Okay, but looks like a tricky area to find support, if you ask me. Let's do like this. Voila, and maybe we want to change this into an orange. Here we go. And let's... Okay. Now the high end. Let's do that one. We got 72.4. 72.4. And this gives us 53,275. So do this. 53,270. Good enough. Yeah, on the money. There we go. Awesome. Awesome. Then maybe for the ultra low end, we are going to remove this red line over here. Would be 20.6. And this would be, oh, this is coming up. 40,800. Interesting. Oh no, 600. See how this is moving? You see, guys, this is why, and I keep saying that again and again. Redo those analysis as often as possible. I can't say it enough. It's not because I'm unsure. It's just because these things do change. And, you need to re-evaluate the entire situation. Now, look, this candle here closed. The 3-hour candle closed. The 1-hour candle closed. And what do we see? It did close below the yellow line. Still not game over. As long as we're not going for lower lows, this thing could still recover. But now we have a new area that we are looking at. And that could be this lower low over here. Or maybe, yeah, because it's such a short notice, I would go for the wick. I would literally go for the wick or the closing of the candle over here at 47,600 and some pressure down. Okay, now let's see where this goes in the meanwhile. Cool. Let's go over to the 5-hour chart. 5-hour chart, we are going to do the same areas just to compare. The 66.1. So 52,600, a little bit lower. That's actually the wick, the high wick of this area over here. Interesting. Interesting indeed. What, I'm going to mark it off like that. And then we do have 32.9, 44,200, actually lining up with this area over here. Okay. This is actually very, very interesting. So, oh, and we have a code, guys. We do have a code. So if you are into some instant tokens, go right ahead. It's WO-FFFBE. Triple FBE. Yeah. Triple FBE. Beautiful. Cool. Now, what else do we spot over here? This one, I'm going to line it up with that. Then this one, I'm going to line it up with this one and change the color. Beautiful. Have a look at this trend line over. Can be extended. And this is fairly interesting. Now, this is a resistance line that has been building from quite some while ago. We do have 1, 2, 3 hits. We do have a crossing, rejection, and here a new hit. So potentially this one over here, don't really care about it anymore. The two red ones, they could be fairly interesting. Just this one here, I'm going to make it invisible. I don't think it's going to serve for a lot anymore. Not for now, at least. Things could turn around, but yeah, for now, I'm more focused on the blue one over here. Just because it has been tested again. On the downside, we could easily see a retest of this area happen, bouncing up, but rejecting against the upper line. Potentially we are going to go further down. If we see price get below the yellow box, there is going to be at least a bounce back up, and then we're going to have to see whether we want to stay in the in the position, because I think potentially there is going to be more downtrend coming. Once we are below the 43,000, this is where I think it's really gonna crash fast. So yeah, the yellow zone, still possible recovery, still very, plausible that we are going to see more higher highs, because this is where we are going to make one nice bullish divergence. Higher low on the RSI, lower low on the price action, which, as we know, this is usually very strong, especially followed with these 3 bullish divergences over here. Now, this is usually one of those nice reads that cannot be ignored. But if we really go further down, then the case has to be built off of this this area over here, creating a new bullish divergence. But as you can see, the volume is rather thin and there is going to be a lot of resistance. So rejecting this area as a divergence, I think we are going to see a lot more sideways and crawling and stuff, rather than a strong push up for for higher highs. Now, actually, once we break below these areas, yeah, I wouldn't think that a lot of continuation to the upside is still going to happen. There are going to be bounces, of course. There's always bounces. There are always retests of the higher area, potentially maybe even bouncing against this big node over here. But after that, I do believe that it's going to be slightly, slowly south. So yeah, that's more or less the way I would play these zones. And then on the upside, it's actually fairly easy. Breaking and closing above the trend line, the resistance line over here. Potentially maybe a little bit of new support, and then keep on going. Rejecting this area would bring us back down to the lower areas, but as soon as we see price move above this, we go up to the next area, and this will be calculated off of this one over here. And let's look for some nice RSI levels. Maybe on the 10-hour chart, we are going to get a nice read. Yep, that's gonna be the one. Or maybe, let's see, the 6-hour, no, the 12 maybe. Yeah, that's a good one. This one lines up. Awesome. So let's have a look here. We got 82 and 82. Yeah, easy, 82. All right, well, potentially, this is way too far ahead of time. So we're not going to use this. Let's see. It has to stay within the realm of usable. If it's not usable, then we can't use it. 80.0. That would be 61,000, 62,000. Right. Let's just do it like this, 61,009. Okay, but this is far off. Preferably, I would like to get a read that has a little bit more short-term potential. And let's have a look. Let's see if on the lower time frames we can find something that is more usable in this area over here. Let's see. Maybe we can take an average of these three. Let's do 80.6 and 77 and 73. Let's go with 77. What do you think, guys? 77 is good? Let's do that. 77. We got 55.4. Maybe we can do 80. 80.6. Let's see what this gives us. 6. Hey. Would be almost. What? Let's drag this a little bit down. There we go. There is your breakout city. Beautiful. Okay. So let's have a little recap. Accumulation and distribution on the 3-hour chart. completely looking straight up, almost ready to cross in the green zone. Let's look at the 5-hour chart. The 5-hour chart, accumulation distribution is still in the red area, but this is just going to take a lot more time to turn around. 6-hour, 10-hour, all those are the same thing. But in the short term, it looks like we are starting to get some pressure back up. Okay, now right now looks also like this new candle is actually really trying hard to break above this red trend line. Let's see where she goes. Let's see what happens. Maybe a little bit of a pullback. No, I think we already had that. Honestly, quite frankly, we did have those candles here being rejected by the moving averages, then finding some support on the EMA 21. And, you know, logically speaking, if there is continuation to happen, it should be on this and the next candle. It should be confirmed on those. And then afterwards, we just go level by level. Remember, use the volume profile to spot where the high areas of interaction and volume are placed, because usually those are going to happen, going to work a little bit like resistance, and after that some more support again, or maybe just finding support over here. But I think it's really imperative to see this area be hit and have a closing above those trend lines over here. I think this would be a very nice signal, and then we can let the weekend bulls just do what they like to do, and that is just jump on a moving train and help us push the price back in the upwards direction. So, you know, a lot of good stuff in the charts. I wouldn't say 100% that it's a sure shot, because as you know, it never ever is, but it's actually easy to risk manage. Having a long position somewhere over here in this area, you can already set a first stop loss over here. Let it just ride down, see where it actually recovers. If we dip in the area below the yellow zone, I don't think there is any chance in heaven or hell to see this pop up just like this. So, you know, once we are in this zone over here, just let it bounce and let's see what actually happens. Okay, don't forget, if you're already in a position, remember, take some profits. There are still going to be bounces, and it's not because you take some profit here and price goes up again that you cannot re-enter more of a long when it comes back down. You know, there is no such rule. You know, you should try to take profit whenever you see the price is stalling out at least a little bit. That is your opportunity, and this is also how you outperform the trend. You know, taking profit, getting back in on support, taking profit at a resistance, getting back in on support, and never closing completely as long as you think that the trend is going to hold. And then if it turns against you and you start seeing this series of lower highs and lower lows, then you can still decide to close your long position and to just let it ride. But at least you took your profits. This will make you more more comfortable into seeing price turn around, because you'll have no regrets. You took your profits, and okay, you didn't make one Lambo in one move up, but you know, this is not what we're here for. We're not delusional. We know that this takes time, and it's a skill that you need to work on and that you need to master. This is the only way to turn this into actually a profession. All right, now let's have a look at the Fibonacci tool. Let's see what the fibs have to say. Mr. Fib. So what do we see? Bouncy bounce finally on the 618. And you know, the 618 is usually the one that the correction leads us to, especially if we're talking about a pullback. Saint Elmo, yay, how are you doing? Yes, indeed. Indeed, like I said, it really, there is much more positive in this chart than before. Over here, you know, over here, this area over here is where I took a big loss. And, you know, in retrospect, you know, I could have held on and be in massive profit. But, you know, over here, RSI was threatening to come so close. And on the way up, I just decided, like, you know what, I'm just going to let go here. I mitigated my loss. And, you know, what do you know? It keeps going. You know, stuff just happens. But, yeah, over here, these signals, you know, I don't want to jump the gun, but having those bullish signs on RSI and price, you know, I really feel that that this could play out to the upside. So, okay, bouncing off of the 618. That's what I said, right? Now, let's look and see in the other direction over here, where is the 618 and where is the 786? So 618 is actually sitting just on this low end of the volume node. And the 786 sitting slightly under the yellow, the orange area. Okay, so I'm pretty comfortable if price manages to pierce above those areas could start serving as a support, especially the 786. Once it really gets broken, there could be continuation. This is also what happens to the downside. When on the downside, we really break below the 786, then usually this thing keeps on going. And where is the next stop? At 1.618, and this would be more or less in line with this area over here, sitting at about 56,500. That was what we've been looking at a few days ago already. So yeah, if this breaks, if we get at least today a closing above 48,800, probably there is going to be continuation in the coming days. So, Saint Elmo, let's see. You grabbed another ETH last night. All right, cool. Cool. What is Ethereum doing? We're gonna have a look at that. No idea why I don't have millions of watchers. So chill. Thank you very much. Thank you very much. Well, you know, I think these things just come in time. Yeah, I haven't been at it for so long yet, but yeah, you know, the one, you know, it's when you persist that all of a sudden things will start happening. And, you know, it doesn't matter how long it takes or if and whether it happens. You know, I really enjoy doing this, and I will keep at it. I will keep at it. Cool. And so yeah, they all want Lambos, hookers, and coke up moon boys. Coked up moon boys. Yeah. You know, the thing is, I will remember you, Saint Elmo. I promise. I will never stop being a normal, regular human being with flaws and character things, and you know, nobody's perfect, and I never think that I hope that I will never stop realizing that I'm one of those nobodies. Even though I become somebody, you know, nobody, even somebody, is not perfect. Yeah. But yeah, you know, we all want Lambos. I would be very happy having a Lambo. But yeah, I don't. I'm not kidding myself. I'm not fooling myself. And you know I don't make those clickbaity titles and what you call them, the thumbnails with yo, going to the moon, 100,000k Bitcoin incoming, must watch. You know, maybe I should be doing that, but I just don't want to be attracting the wrong crowd. I'm very happy with the select few viewers that I have. You guys are really awesome and very interested, and you know, this is what I want to go for. Like you know, sometimes when people in the chat ask me like, "Hey, what's the price gonna be in 2 weeks?" Just like, you know, I feel the hairs on my back going like, "Ugh, I don't know." How can you know? Yeah, but the other guy, he said that. Well, you know, yeah. Thanks, Charles. Thank you very much. So, hey, you know what? Let's look at the dominance. Bitcoin dominance. Bitcoin dominance. What is happening here? Well, let's see. Can we use the accumulation and distribution indicator for the dominance? Right now, it would suggest that we are pushing back up on the dominance. Is there any kind of divergence or anything? Right now, the only thing that I see is the dominance bouncing off of this support line over here. I say if Bitcoin moves up, the dominance is going to move up. Just as easy as that. I don't think that you need to look a lot further than this. Bitcoin moves up, people are going to dump their altcoins to get back into Bitcoin. And what are we seeing? Altcoins are being slaughtered. All except Kyber, ADA, XTZ, Tezos, oh, and IOTA. You know, IOTA has been performing quite well this bull run. This is the first bull run since the inception of IOTA that IOTA has really been shining. But you have to admit, they had a governance problem with, I don't know what you call it, there was a regulator and he stepped down. Then they replaced the guy with somebody else, and they started to make so much more progress. Also, the wallet started to actually really work the way it's supposed to. Integration in Ledger and all sorts of different contracts with big companies and stuff. I keep reading like at least twice a week of new things being implemented and launched on IOTA. So yeah, I don't know. I'm very happy that I was still holding from. I bought them on the ICO, basically. You know, I totally forgot about it. Time travel. Let's see. Wanted to ask me what I do. What do I think is better to trade on Bybit, inverse perpetual or USDT perpetual? That's a good question. You are on the Discord channel, right? I There are differences on both perpetual and inverse perpetual. So first I'm gonna let the code appear. There you go, guys. You want some tokens? Just get them. WO-J9LPD. So the big difference, in my opinion, is actually the potential for the possible trades and positions that you can put. On inverse perpetual, this is where you trade BTC against USD. You can only open one position, whether it's a long or a short. When you open a long and you put a short position, then it's only going to close off of your long position, right? Now on the perpetual, where you trade for say BTC against USDT, your base currency is USDT. So you're going to take out USDT, okay? No Bitcoin. On the inverse perpetual, BTC USD, your base currency is Bitcoin. You're never going to take out US dollars. If you make profitable trades, you're racking up Bitcoin, right? So in a bull market, I think this would be the better one. In a sideways or bearish market, the advantage of trading the perpetual, so BTC over USDT, the advantage is that there you can open two positions. You can open a long and you can open a short. And you know, now that we are in this area over here, moving sideways and these things, I am actually beginning to experiment a lot more with the USDT pairing, just because of the possibility of having two positions open, a long and a short, making so that you can actually start hedging your positions, paying more safety, and you know, but you need to really think very strongly about how to play the markets so that your hedging can actually become strong. And this is now something that I'm trying to really fine-tune before I'm going to release some sort of ideas in the Discord channel about it, because you know, I don't want to be sharing some half-hacked ideas. I really want to experiment for myself first, how to make it really as strong as possible, and then maybe start sharing some ideas about it. But I think this is one of the bigger advantages of trading the USDT pair. But then again, you know, if you're in a bull market, you don't really need to hedge your positions. You know, if you're not in a position, you're going to make money when it goes up, and when you're in a position, then you're going to make like a ton of money when it goes up. So you know, you're just hedged, period. But sideways and you know, slightly down, I think there could be something in it. You know, just at least making positions that you can slowly adjust, so that your secure area just becomes so wide that you really need to be like dumb stupid to lose money. That's basically what I would try to hope to figure out. But yeah, nothing is just cut and dry. Remember that, guys. It's not because you have a good strategy that you can go all stupid. You know, it's still money you're playing with, you know. So but yeah, those are the two biggest differences that I find, and the ones that I think are the most important to be aware of. If you're thinking about, you know, which one of the two is more interesting to you. I hope this answers your question. Because there's never a short answer with me. So let's see. Yeah, we don't have as many viewers as we did yesterday, but 4 likes. I'm really happy. Thank you very much. This is awesome. Now let's have a look. The Dixie dollar. You're welcome, time travel. You're very welcome. So the Dixie dollar, what did we say yesterday? Yesterday I said it was gonna try to move up, right? So yeah, beautiful pump. Let's have a look at yeah, even on the longer term, this is going to continue. This is going to keep going, guys. Dollar is really going to keep pushing up. Let's look at E-minis, and yeah, like I said, E-minis, like, you know, yesterday was not looking good. Potentially over here, this was some bullish divergence, but have a look at this over here. That's what I said. Once it really breaks down, it's not gonna be easy anymore. So what happens is right here, we already have a bearish divergence that is not going to be broken as long as the price doesn't break this level. And then again, you know, if it breaks this level, then there's the next and the next. So yeah, painful situation for traditional markets. But you know, this is just like the Bitcoin dominance. You know, some markets, some stocks are actually just going to do good. They don't care. But yeah, overall, I do think that this is the end of the ride, at least for a little while, for traditional markets. So yeah, just you know, take it as you will. But the dollar moving up, it could create some extra pressure on Bitcoin. Not that they are correlated. You know, we've seen this for some time, that you know, the markets do play with each other. Bitcoin has been writing its own story since quite some time, and I think that there is a chance that the dollar moving up is just going to slow down the progression of Bitcoin, maybe making this recovery extend even a little bit further. Maybe it's not just gonna happen so quickly. Maybe we are going to see some more sideways, a little bit of volatility and all these things. But I don't think that the dollar pushing up is just going to crash on Bitcoin. I think right now this is a story on its own that needs to be played out. Dropping below crucial areas, this is what is going to break the price. Breaking above crucial areas, this is what I think is going to push the price up. But not just what the dollar is doing. I think dollar and traditional markets, those are more correlated than that. Cool. So yeah, this is more or less it. Let's look at Ethereum, because Saint Elmo, was it? Yes, Saint Elmo got some Ethereum last night. Oh, sneaky you. So let's have a look. Was it a wise decision? Well, you know, all in all, I need to say that yeah, it was not a bad idea. Looking here, we do have a nice bullish divergence with the RSI on an uptrend, which is really nice. Then we do have some more pressure down on the RSI while maintaining the higher lows. So yeah, Ethereum could just pull through, especially once we see Ethereum go above the 0.032 Bitcoin. So let's say this area over here. You know, breaking above this area, I think you're in the clear, and Ethereum might again start outperforming Bitcoin. But for now, still going a little bit of sideways, but yeah, things could play out. Beautiful. Well, if you guys have any other requests for altcoins, feel free to ask. If not, then we are slowly going to wrap this up. So yeah, Saint Elmo, you strongly believe the fundamentals will save Ethereum. Well, yes, and I'm sorry to say, but on the other hand, I would have to say no. The one problem with Ethereum is the congestion of the network pushing the gas fees up astronomically. That's the only thing that is literally crippling Ethereum. Those gas fees that can go out of control just like that. Because let's be honest. DeFi is why people are rushing over to Ethereum, right? And doing transactions on DeFi are crazy expensive. Like, if you're not ready to put $2,000 in a DeFi protocol that, in all fairness, sometimes still is untested, or in beta, or still open to attacks and vulnerable, um, you really need to start putting like real money in there, and then otherwise the gas fees are completely out of boundary. And yeah, I know Ethereum 2.0, there's been so much talks about it, but is it really going to take down the gas fees? That's my question. I know that the congestion of the network is going to get lighter, but I'm not really sure that the gas fees themselves are also going to drop dramatically. Yeah, that's where I'm going. So, for now, on paper it looks good, but I want to wait until it's a proven thing. And don't forget that right now, Binance Chain is also becoming very, very hot for DeFi projects. And there you could do the exact same transaction, placing tokens in liquidity pool, becoming liquidity provider for $1 in transaction fees, over $90 on Ethereum. So yeah, uh, that's my main concern. All I wanted to throw out there. But yeah, Ethereum, it was the first smart chain, it was the first smart contract blockchain, and you have to give them credit. They were like so innovative, but yeah, there are things that can be improved, and yeah. Also, becoming a staker, a node holder on Ethereum is crazy. I don't know, but it's like 13 ETH or something that you have to pay, and you lose them, you cannot recover them. Like, you put down the ETH, start up your node, and then your node has to be up and running all the time. Dropping a transaction is at 32. Oh my god, Jesus, like, wow. Yeah, I knew that it was a lot, but yeah, wow, damn, that's a crazy lot. And you lost it, you're never getting it back. Except if you keep your node running long enough, and eventually you earned your 32 Ethereum back. But yeah, it's a big investment. So how many people are going to do that? Is it going to be as decentralized as a proof of stake network should be? That's also something to think about, right? Um, so yeah, a lot of things to think about. There are so many nice projects out there. Um, but yeah, for me, it's all about making money. Yeah, exactly, St. Elmo, right? Retail is not going to jump at that. So yeah, here you go, guys. Last code for today, and then afterwards, I'm going to wrap this up. We got WO-WGSTX. WGSTX. Good. So yeah, for me, it's more about making money rather than being a long-time hodler and being part of the company. It's there are so many really nice projects, and some projects will really be thank you. Some projects will really grow and shine, and we are going to start using them. And then also, I believe the price of those projects, of those tokens, are going to level out. And it doesn't matter. It doesn't really matter how expensive or cheap those tokens are. When the project is being used, then all these things are going to level out. For now, it's for everybody, I think, mainly a game of learning how to make money on these entire ecosystems, the way they are growing and stuff. So yeah. Um, So Saint Elmo says, "Truth is, you're too scared to trade. Like, I'm not a legend. I'm just getting cash jobs to pay me in coin. That's not bad. That's really, really not bad. You know, as long as you're trying to gather up and grow your wallet and grow your portfolio, that's great. That's the way to go. Well, my balls of steel, my balls, they got harder and harder by being kicked really hard in the nuts. Eventually, you'll learn. And yeah, I think learning something for me is just as valuable as earning, you know. Right? So, you can pay a lot of money for tuition, and once you have it, you have it. It's yours. So, I just walked the way and decided that even if I was going negative for some times and stuff, and the losses that I took, especially back in the days when I started trading, I don't really think of about them as losses. I don't even stop to wonder about them anymore, because each and every situation taught me very valuable lessons. It also showed me that I could start getting more and more comfortable in the motion of the market. There are certain things that I'm fairly comfortable in that are not going to happen, like really, really crashing and never stopping. I know it's not gonna happen, but if you're new in this game and you see the markets go down and down and down, and you're almost here at this level, and you think like, oh my god, this is never gonna stop, I'm gonna lose everything, then this is where a lot of panic selling happens. There's panic selling, and then what do you know, price goes back up. you know. So it's more like learning how to prepare for worst case scenarios. Um, so yeah, Saint Elmo, it's really cool. You're always welcome to watch the stream and be part of the chats and stuff. I'm really, really very happy to have you in here, picking up ideas, learning and stuff. That's what life is all about. Leave the day a better and more mature person than how you entered it. Always move one step forward. So you're getting 32 Ethereum. Okay, you know what? When you set up a node, I would like for you to review how this works, and give us some insight on how these situations are running, because obviously I'm not going to get into that, but I'm very curious. I'm always open to try and learn new stuff, and or learn about new things. I think it's important for our mental and spiritual growth. um uh, yeah, maybe one day you could do a Saint Elmo dump on the market. Just give us a heads up, please. Cool. Cool. But on that note, guys, I'm going to wrap this video up. You guys, as always, are more than awesome. I enjoy talking to you guys each and every day. So let's keep an eye on the chart for now. Let's see what is going to happen. Um, right now, we do see a green candle pushing above the channel, the red trend line. Let's see if it also closes above this level over here, which would be a nice confirmation for continuation. Then if that happens, even a little bit of a pullback would still be okay, would still be considered healthy. As long as we don't break the lows, then we go, of course, for the next levels and the next levels. Remember, the yellow level could still recover rather strong. Once breaking under this, the orange level is going to be our last resort, where of course we're going to have to wait for some confirmation. And how should we play this? Well, remember, once we drop below the zone of strong recovery still being possible, then the idea is that maybe it would be a better way to just at least close some of your long, so that at least it doesn't hurt to see it go down. But then be patient. Be patient. Watch for the confirmation, because that's where you want to enter your long again. And if it really all turns to shit and flames, we are going further down, then remember that around the $41,000, this is where, even if price bounces up, I do not think that that we are going to see this thing recover that easy. If it does recover, it's going to be really, really slow. Uh, no shit and flames. Okay, so yeah, your eat farm will be 10 piece more expensive in the morning. You need to fix roofs all summer. No shit and flames. Yeah, yeah. At least I wish you all the best with that project. I really hope I hope everybody succeeds. That would be one of it would be nice. I would enjoy that, seeing more people succeed and stick it to the system and stuff. But yeah, on that note, guys, I'm going to wrap it up. Let's all stick it to the system. I thank you all very, very much for watching. I hope to see you guys tomorrow, same time, same channel, 5:30 UTC. Hope this is a good time for everybody. So I give a big shout out and thank you to Saint Elmo, Time Travel, Charles, and Rakesh. Thank you very much for joining, guys. And yeah, have a great evening. Have a nice day. Have an awesome night. Keep your friends and family safe. And I hope tomorrow you will be here with stories of crazy success. Thank you very much, Time Travel. All right, I'm signing off. I'll see you guys tomorrow. Peace out.